Today we're talking to Michael Verrechia, Managing Director and Co-Head of M&A at the Activism Advisory Group at Morrow Sodali, about managing activism in IR. Welcome, Mike.
Thank you, Mark.
Mike, today we're going to be talking about managing activism, and the quote, "Failing to plan is planning to fail," came to mind as we were planning. It seems as though a huge part of activism preparedness is having a well thought out plan. So we're looking forward to hearing some of the tips and best practices that you have to share.
Thanks for having us, Mark. Looking forward to it.
The first one we have here is, if you could start by telling us a little bit more about some of the services that Morrow Sodali provides around activism and some of the ways that you help corporates.
Great. Well, Morrow Sodali is a firm. We've been in business 50 years. We have, core services around strategic consulting in connection with shareholder engagement, activism, defense, and preparedness, ESG consulting, capital markets intelligence, and proxy solicitation. We have about 600 plus clients that we work with in this capacity across the globe. We have offices in every major market, and we have people on the ground in those markets that speak the language. And that's really a bonus to, most of our clients, as they have holders that are non-US all over the place, that we can really interact with them efficiently. So, as we talk about activism and some of the services we provide, our preparedness program really centers around some critical areas of focus. First, we work with companies to establish a comprehensive shareholder profile analysis. So what companies see when they look, when they work in with their IR teams and they're engaging with shareholders, they tend to see shareholdings that are stale as soon as they're filed. So our firm comes forward and we look at that shareholder profile from a voting control perspective. So our goal is to look at your last filing, get a sense of who owns what. And then after looking at that, we're looking at what do those institutional holders have to vote? And then ultimately, how are they influenced, by whom? And ultimately, how do they make a voting decision? So in doing that, we establish a shareholder profile. We also provide a strategic stock surveillance. So once we establish that profile, we want to continue to monitor that profile weekly as we look at trading. We look at movement among bank and broker custodians and understand which of your top holders may be buying, which may be selling. And are there any red flags in the trading activity that could lead us to believe that, maybe there's an activist investor who's taking a position, or more than one? Maybe there's a wolf pack of investors that are taking positions. Once we're doing that and we've established that profile, we then look at using that information, right, to create a foundation for your campaign. We provide voting scenarios based on multiple different, voting outcomes. And ultimately what we're looking to give to our clients is a snapshot of how would you defend yourself if a proxy contest were to surface today with the profile that you currently have. Where would be the key areas to define success in that type of a campaign? And you'd be surprised how many companies don't really focus on that. And so therefore, when someone surfaces, they're working with information that's stale. So, again, I believe that's a foundation that you have to have in order to get the best advice around what you should do. Should you be fighting the proxy fight? Should you be settling the proxy fight? So again, our activism preparedness services really kind of focus around understanding your profile, tracking your profile, and using that information to give you a realistic sense of what to expect if you're faced with something like this.
And you touched on a little bit of it there in sort of the surveillance and just trying to understand the shareholder base in general. But what should IR teams be on the lookout for if they think that they have an activist, or as you said, a wolf pack in the stock?
Yeah. So, that's a great question, because I think, how do companies determine that without the activist surfacing? Right? If an activist wants to be discreet, they want you to play below the radar, they do. Oftentimes, the first time you have someone that's accumulating a position is when they surface or they call you, right? So I think having an IR team that's fully engaged, that, work with firms like ours to and IR firms to understand who the holders are when they call in, right? We always say that you're in a proxy fight from the very minute an activist calls you on the phone or emails you. Whether they're going to run a fight or not, every communication and everything that you do with them, everything you say to them, becomes part of the record in the background of the solicitation. So just having an IR team that's aware, of who the players are in the space, or that they have a firm like ours to bounce those things off of as a first line of defense. I got a call from Carl Icahn. Who is he? Well, we have a lot to talk about, right? But sometimes it's a first time activist, someone that you,
Scary question.
sometimes there's a first time activist or a new player in the arena that, they could call in and you may not even have a clue of who they are, what their history is, what their intentions are. And you're working to do what your job is, which is, engage with that shareholder. And I think you might approach it differently if you know who these people are and what their intentions are.
So what about an instance where, an activist is in the stock, but they haven't surfaced yet, as you put it. So let's say, whether they come up in surveillance or they even come out like a 13F filing or something, and maybe they're not, a very active activist, but it's come up. What's the first thing that you would suggest an IR team does in that instance? Is it to reach out and have a conversation, or what do you recommend?
Well, look, I think so, again, it depends on what the intentions are of the activist. If they want to make it known that they own a position, they're filing it. It becomes a public situation. If they're looking to really work constructively behind the scenes, they're communicating, through the IR team or through the executive management team, or sometimes even to the board directly if they think they can get access there. And so, as far as the first thing to do, if somebody is surfacing and you had no idea that they were a shareholder and you're not doing some sort of surveillance program, that's the first thing, is to really assess the damage, assess what their holdings might be. Are we talking about someone that has, a very small piece of your stock, or is this someone that has 2% and we're seeing evidence that they're buying more? Activists often try to stay below that 5% threshold so that they don't have to file a 13D. And so, you may not see them until they decide to reach out to you, unless you're using a surveillance program, and a strategic surveillance program at that, that's specifically looking for any red flags in the trading activity. So I would say that if you're not doing those types of things and you hear from someone that's an activist, you want to put that program into play right away.
And if an activist hasn't maybe reached out and you're aware, say even through a surveillance program, would you recommend that an IR team or company reaches out to that activist to understand sort of what their intentions are?
I think everything is that's sort of a unique situation, right? I've been involved in situations where we are actively tracking stock and we are seeing evidence of an accumulation that raises a concern for us. That alone doesn't tell you whether it's Starboard or Elliott. Sometimes you can get, some indication on who's there, but that alone isn't something that says, okay, you're going to go call, this person right now. I think the truth is just, having that intelligence makes you smarter for when that person does surface, if they surface. And when they do, you'll have a plan in place for how to engage properly, what the history has been. What have these people done in the past? What other concerns have they had at other companies? What have their other campaigns look like? So those are the types of things that you want to build upon when you realize that someone's out there. You want to understand, a comprehensive history of who they are and what they do. That doesn't mean you want to call them right away and get the ball rolling, because, listen, not every activist, they don't run campaigns everywhere that they own stock, right? They sometimes move on, and hopefully they will.
Okay. So it's kind of it's a starting point, to your point, to start the plan, start planning, start thinking about what the next steps are, if they are to surface and you're engaged in a content. And so that sort of segues into our next question, which is, I was reading an article the other day, basically stating that a company having a plan can deter activists. Almost like the act of having a plan can help. Do you think that's true?
It's interesting. It's an interesting comment. I would say that I think it could be true, but really only in very unique circumstances. Having a plan in place is not going to stop Carl Icahn or Starboard or Elliott or, one of these activists that have access to unlimited resource. They've already done their homework on your company. They believe there's a way to unlock shareholder value. And simply having a plan in place isn't going to necessarily deter them. So I think it could be true in very unique circumstances. But I would probably say that, in most cases, when these folks are arriving at your doorstep, they're coming with a plan in place to kind of get what they want, right? And so, they know that the biggest companies in the world have, top advisors across every, area that they need to be covered. And so I just think that it would be a very unique circumstance for that to be true.
What percentage of companies that you speak to have a plan in place?
That's a great question. And that's something I talk about a lot. I would say that, most companies that I end up having to talk to believe that they had a plan in place. But is it the best plan in place? And I think the answer is no. I mean, I would say that many companies, when they think about activism, they're looking at activism that has occurred within their own industry, right? For the most part, they're looking at who the players have been. And then they're building sort of a plan, like an emergency plan. If in case of emergency, break the glass, I know I have a law firm to defend me. I know I have an IR firm or PR firm. I know I have an investment bank that I'm working with. And then you have a firm like ours that deal with shareholder engagement and, surveillance and solicitation. And most companies that I work with have identified, who those players are going to be. But that by itself is not really a preparedness plan. And I think, having a more comprehensive look at their profile, like we just talked about, is really what a preparedness plan should entail. And even if you don't listen, even if an activist never knocks on your doorstep, right? Having that information just makes you more intelligent. It can be difficult to have to work backwards from when the activist surfaces to build all of that intelligence over time. I always say with surveillance, the information is better the longer you're looking at it. You tend to see the ebb and flow of stock movement. If you have, index fund heavy at the top of your profile, you'll see the stock loan kind of coming in and out. So, you're just in a better place for having done that work. And if an activist surfaces, at that point, I feel like you're very well prepared, as opposed to having to work backwards against the clock. So,
Right. So you sort of covered a little bit of this in here. What tips would you give to an IRO who is maybe starting to put together a plan? Because I feel like maybe some of the people you talk to, they have a plan because something has happened to them in the past that it's top of
yeah.
mind, right? I don't think not all companies operate that way. So there are for sure a lot that are just starting out on this journey for whatever reason. What tips would you have for them?
Yes, that's also a good question. I think that it's, again, understanding, your shareholder profile and who your advisors are going to be is really the first step. But what I would also say is, have a group of people internally, right? Like I've worked with companies where the IR and the legal are on different sides of the house. They don't communicate as effectively as they could. Whenever you have a team in place where internally you're all on the same page and you're all moving, in one direction, that's an important part of all this too, having that communication and not really falling into any traps of just doing things over and over again just because that's what you've already done. That's another thing that I tell companies, I think you're right that I get involved with companies when there is a problem or they think that there's a problem. But I would say probably more so over the last, handful of years, companies without any direct threat of activism are reaching out to me and saying, what should we be thinking about? Right. And I think that's a sign of companies getting smarter about, not wanting to be flat footed if an activist surfaces. And I think that's really an important part of preparedness for anything, right? Is making sure you've done the
Yeah.
homework early.
Yeah. Well, that's why we were talking about that quote, because it's this whole idea of failing to plan is planning to fail.
Right.
And I mean, that's exactly, I think, what the purpose and focus of this episode is really on is being proactive. And so it sounds like some of the three most important things you would say to get down early is, I think that's great on the internal team. Who is that internal team that we're all going to rely on and interact with? Sort of the list of advisors that you'd engage, and that shareholder analysis is a big piece of it as
Yeah.
well. So if a company has identified or believes that there's an activist in the stock, what should they avoid doing at all costs?
Yeah, I think they should avoid just trying to take it one-on-one, right? So I've been involved in such situations where there's, an IR person who, gets an inbound call and, believes that they can kind of handle this, without really talking to anyone else. Or really doesn't even understand the situation enough to know that they shouldn't be doing it. That's part of it, like being educated on that. This will go back. I've been doing this for 25 years. And this goes back probably 15 or 20 years, but I once had a client who came forth and an IR person who came forward and said, they were asking me questions about the cost of mailing the proxy material to their shareholders. And I talk about this a lot. And so, that's a pretty common question when you work with companies around an annual meeting. We answered the question for them and then they came back and said, well, what if you had to mail to every account? And well, it costs more to do that. And then finally I said, but why are you asking? And, and the IR person said, well, I got a call the other day from Carl Icahn. This is a true story. And she said, we, he was threatening to, mail to our shareholders or run a proxy fight for board seats. And we figured once he realized how many holders we had and what that cost, that he probably wouldn't think that was a great idea. And that was the first sign. And so again, not having the wherewithal to understand what's in front of you is a big thing you need to, you need to avoid trying to handle it on your own. You need to raise these things up the flagpole right away. I think that's a very extreme circumstance, of course. I think probably these days more internal IR teams are very well aware of what can happen and who the major players are. So it's not likely, but you never know. Like I said, there are, especially in the last couple of years, there's been a lot of, first time activists or, activists who ran campaigns at smaller companies and then they're targeting larger companies. And so you may think that they don't have, the resource to run an effective campaign. And I think that's simply not true. That you're seeing more holders running campaigns for the first time and their targets aren't necessarily small companies.
Right. Yeah. So it's having that education, not handling it yourself. And I think it's, also having access to that information in some way, whether it's through an advisor or data platform of some kind where you can look some of these people up and try to understand a little bit more about them before you engage in treatment.
Well, I think firms like ours are working more as a supplement to IR. We work with IR teams and we work with them effectively, right? That's the focus is to be like that line of defense. So, who's listening to your earnings calls, who's requesting meetings, who's, wants to meet you at conferences. What are they saying? We want to understand those things. And, and again, all of that kind of, I guess, goes into what we would consider your vulnerability, to a campaign. So I think there's just more focus on education. And like I said, I think the key thing is, don't try to go it alone.
On the flip side, can you recall an example of a client handling a proxy contest well on their own?
Yeah. Yeah. The short answer to that is no. And again, having done this for a very long time, I can't tell you how many times we hear from the CEO of a company that we're talking to that, they're not concerned about a shareholder vote. The shareholder base loves me. They're going to vote with us. I can deliver 60% of the outstanding shares and the activist doesn't have a leg to stand on. And never have I heard someone say that and then actually deliver on that, And again, if they were to do so, it would have to be at an extremely small company without a lot of institutional holders, and they would have to have a lot of relationships with individual shareholders to kind of get you there. So I think it's very extreme situations where a company can really go this on their own. And I really don't think they should. I mean, I think it's pretty irresponsible to shareholders to take that approach that you could just deal with it on your own. You want to make sure that every decision that you make in dealing with an activist is based on information, intelligence that's accurate. And so, just looking at your profile and trying to understand like how they're going to win a fight on their own, they don't have all the information and they don't know how to get to it. That's the other thing. That's why firms like ours and others will look at, your shareholder base and give you a sense that, you may think you're going to win this, but unless you win certain pieces of this vote, you have no chance. Yeah. And so again, you're basically trying to do something without having, the right foundation for what the campaign should be.
Yeah. Hope is not a strategy.
Yeah, exactly.
We're going down sort of a bit of a negative path of questions here, but I think it's good this is how we all learn. Can you recall an example of a client doing absolutely everything wrong before bringing you on?
Okay, so again, I don't know about everything wrong, but certainly a lot wrong, right? I can think of situations where, you know, companies go down a long path of engaging with an activist without really understanding, how to, or if they even have, you know, not even really knowing what they own, kind of going on the activist word on what they own or that type of a thing. So, I can say that, I've had situations where, the CEO agrees to meet with an activist one-on-one, and it turns into a he said, she said type of a thing of what happens in those meetings. And so, those situations are tough to come back from, right? Any wrong move that you make can cast doubt upon, the shareholder base, And so you have to remember everything that you do with an activist, every conversation you have with an activist goes into the background of the solicitation if you're actually in a proxy fight. And when you get in front of the institutional advisory firms like ISS and Glass Lewis, or you're talking to your top institutional holders, right? Whether it's the Vanguards, the BlackRocks of the world, everybody always wants to know what happened that got you to the situation that you're in, And so all of these things that you do becomes public knowledge for the most part. And if you're doing those things without, the advice of people who have done this before, you can really dig a hole for yourself in that context. Again, I can't think of an example where they've done absolutely everything wrong, but I've certainly been involved in situations where, the companies have done a number of things wrong. And then you do have to try to work your way out of that. You have to explain yourself. You have more explaining to do. So, I think, how do you rectify those situations was something you'd asked me earlier today. And I think it's really just about telling a proper story and getting the right story in front of your shareholder base and letting them make an educated decision on all the facts, all the information that's out there. So it can be an uphill battle for sure.
Okay. Well, we're kind of on our last question, and so I wanted to summarize a few points that were made here. I think a couple things that you shared in terms of best practices and things that IR teams should be doing. The first one is understanding your shareholder base at a deep level. The other one you talked about was sort of creating an internal team for responding to activists. I think that's a great one, especially as you talk about the next point, which was don't go it alone. Right? Don't try and go it alone. It's a good point that you made. It's irresponsible. One of the other things that you mentioned was making sure that you've identified that list of advisors, right? That you're not ideally going out and trying to find those advisors after the fact, once an activist has surfaced, that you've already started to build some of those relationships. So there's some of the key points that we touched on, but I have one last one, which is, what is one final tip that you would give IROs who want to build a better activist preparedness strategy?
I think it's one of these things that, is true for almost every company, is just build a very robust shareholder engagement strategy. Even if you think that, it's not necessary, right? I can't tell you how many companies that by the time I end up talking to them, you realize that there is just no, they've had little communication with their institutional shareholders. And even your retail shareholders, like, don't ignore your retail shareholders either, right? So it's about having a good engagement strategy across all shareholder constituencies. You don't want to go to your shareholders for the very first time when they're faced with a decision to vote for either your nominees or an activist nominees. You really want to build, rapport with them over time and understand what's important to them. Not just talking to them, but actually listening to what they're saying, understanding what their issues are and addressing them where you can, right? So all of those are things that go into a good engagement, program. And then companies do tend to ignore the retail population. Over the years, companies have done quite a bit to ignore that population because you don't get the best vote return from them. But, again, looking at your profile, you need to understand that these are people who made an investment in your company because they want to believe in the investment. They believe in your company. And they don't want to feel, out of the loop on these things. So just really working across the institutional and retail components to understand who they are and what's important to them, and actually listening to what they have to say and and looking to address issues where you can. I think that's probably the one tip I would say for any IR group, just really, engage for real.
Yeah, that's great. Big focus on being proactive in this episode. Mike, really appreciate the time. Lots of helpful insights and tips. Thanks again for coming on the podcast.
Thanks so much, Mark. We appreciate it.
I hope you enjoyed today's episode of Winning IR. For more winning ideas, make sure to subscribe to this podcast. This podcast is brought to you by Irwin, a better way to manage investor relations. For more information, visit www.getirwin.com.